Eric Muathe for the weekend of June 14th, 2014. Let's take a look at the Friday session here. See the Dow up about 0.25. The Nasdaq and the S&P 500 were up 0.3%, and so was crude oil. We see that the VIX was down 3%, the biggest mover on this short list of market indices. So let's take a look at how the market responded for the week. We see that for the week, S&P 500 was down slightly, 0.68%. For the week, we see that the Nasdaq was down 0.25%, slightly down. And for the week, we see that the Dow was down the most, slightly just under less than 1% for the week. So slightly down for the entire market complex. So for this weekend analysis, before I go into my annotated charts, let's take a look at some observation here. This is the S&P 500 weekly. You can see that every time you touch 69.10 and pull back, the market makes a short-term high. So every time you move back below 69.10, like here on the weekly, you get a pullback on a weekly time frame for the market. You touch 69.10 and pull back, you get a pullback in the market. You get movement back below 69.10 here. The odds are very high for a pullback, just like we did here beginning of March, which was that high there. And you see right now we are doing the same thing. If the market stays below 69.10, it looks like more than likely on a weekly chart we might see some type of movement lower or some type of consolidation. This is the S&P 500 weekly, and that's the observation. It's a simple reasoning and a simple way to take a look at the RSI on a weekly time frame. Now let's go to the annotated charts, and this is the Nasdaq weekly. We've been watching this 4336 weekly closing high. The market moved above that during the week but failed to hold above that. So this, as of right now, is a failed breakout, and failed breakouts are notorious for taking markets lower. So if the market cannot move above 4336.22, then this could suggest that more than likely we are going to get a pullback unless we get the breakout. So this failure to hold that breakout level could actually turn into sell signal. Also, you see that there was a previous break right there on the RSI. So this break on the RSI was the reason for this pullback on the Nasdaq. And so if we draw a straight line from the break point here, we see that the market is finding resistance precisely where we were expecting resistance on the weekly time frame for the Nasdaq chart. If you take a look at the Nasdaq daily, you see that there's also some type of reason to wonder what the market is trying to do. So that was a break point there. Right here was a break, and that break here led to this movement lower. So we draw a straight line from the break point like that, and you can see the market is struggling to hold that level. If it stays below that level, that's a sell signal. Also, this level here on the RSI is where it's been finding resistance. Most recently the resistance was here, which happened to be the high there, and now we see that we've gone above that line and back below it in uniform action. So this could also be looked at as a sell signal on the daily for the Nasdaq. If you take a look at the Nasdaq 60-minute chart, then you start seeing some signs of life in the market. And on the 60-minute for the Nasdaq, this line here on the RSI is what held the market together over the last couple of trading hours. And so the market hour to hour could bounce, and that's just from the fact that the RSI is holding support where it needed to. So short term, the market looks like it wants to bounce on an hour to hour basis, of course, unless we break below that support line on the hourly. Another way to take a look at this is by taking a look at the Nasdaq 30-minute chart. So 30-minute chart on the Nasdaq, and we see that there was a perfect entry point here on hindsight. This is on hindsight. We had this nice move higher there. So we find that this entry point here was from this nice breakout on the RSI. So it was from this nice breakout on the RSI. I'll show you that in a second. So this breakout here, which was this entry point on the RSI, was this perfect entry point. So we draw a straight line like that, and this becomes where you find support there was support here, which was that perfect entry point, was support here, which was this consolidation, which was a perfect entry point, and you can see that we've gone below the line and back above it. So this area here is support level. So more than likely the market is trying to stabilize and move higher on a 30-minute chart for the Nasdaq. Also, if we take a look at the Nasdaq monthly, and this is key in my opinion, the fact that the monthly RSI, and I've been saying this for a long time, as long as the monthly RSI stays above 69.10, the market is going to have a bullish trend in it, because this is a sign of strength, the market holding above 69.10. If you take a look at the Dow Weekly, so you see the Dow Weekly here seem to be having some type of a technical problem here, making higher high in price, but the RSI is being rejected. So that negative divergence could actually become a serious sell signal. We need to continue watching that. Of course, if you're a bull, you'd rather the market actually break out above this declining RSI line. So you can see this line here. The only way the market can actually have a technical breakout on a weekly chart is if we break out above that line. Right now, it looks like a sell signal because the market is finding resistance exactly at the top lines of the weekly RSI. If you take a look at the Dow daily, we start seeing that this line here, which goes back a long ways, was a back test line, and we talked about this midweek that should we find resistance here, that the market could pull back, and so we've already seen the pullback. So that was correct, that resistance there on the back test of that line is something to watch for a pullback. And also one should expect support, or one should have expected resistance from this line here. This line was the line that told you the high here. The break of that line was this high here. So if you check out my uniformity videos, then this was a clear sell signal on the daily. And so it's not broken because we are still trading above the 50-day moving average. You know, it's just a pullback, and sometimes you need shallow pullbacks before you move higher. So it's not necessarily a sell signal, you know, that the market can't make new highs, but day to day that was a sell signal. If you take a look at the Dow 60-minute chart, what I want to show you is that this line has been perfect support and entry point on the Dow. This line right here, it was a perfect entry point on an hourly basis here, which was this low. Perfect entry point here, which was this low. Perfect entry point here, which was that low. Perfect entry point here, which was that those lows here, and you can see we touched that line precisely. And so I'm thinking hour to hour, even the Dow is showing signs of moving higher. Now if you take a look at the Dow monthly, you see that strength on the monthly that I'm talking about. Then market continues holding above 69.10 on the monthly, so that's a sign of strength. Now if we take a look at the S&P 500, you can see that it's had a nice couple of weeks, so a pullback makes sense. But you also notice that on the RSI on the weekly, this could be some type of a sell signal here. So we need to watch that. It needs to move back above 69.10 if the S&P 500 is going to move higher. It also needs to hold on a weekly basis above 1881. It also needs to hold above the 10-week moving average if this current trend is to continue higher. I look at the S&P 500 daily, and we see that the breakout took place when it moved above this declining top line. Once it broke out, so that was the entry point somewhere there, and it had a nice move to new highs. So it's bouncing off that same line. So the same line that was a buy signal, if you extend the same line right there, you can see that it is finding support on the back test of that line. So maybe even day to day, S&P 500 has seen the worst in terms of short-term pullback. S&P 500 60-minute chart, and just like the Dow, you see that it's finding support here, and this line has been successful in holding the market and finding support. There was perfect entry point there, support here, which was this lows, moved above the line there, which was this lows, found support here, which was this lows, and recently the last couple of hours we held support there. So more than likely, hour to hour, the S&P 500 wants to move higher unless we open Monday and it gaps down and breaks that trend line. We also see here that the S&P 500 remains well above 69.10. That's a sign of strength. Again, the major averages are holding above that 69.10, and they'll continue being strong until they move below 69.10. If we take a look at volatility, this is the VXX, the VIX ETF, and you can see that the reason why it pulled back on Friday is because it came into resistance with this declining RSI line. So that was the stall point right there, the reason why it's finding resistance there. So the VIX might not move much higher unless it can break out above that declining RSI line. It also happens to be an area where this is where it's been a buy signal for the VIX. You can see that when you move above that line there, let me draw that line again so you can see it properly. You can see that line right there. Every time we move above this line, it's a buy signal short term for the VIX. Move above that line there, buy signal short term for the VIX. We moved above this line here, short term buy signal. But now what happened is we broke below that line recently. We broke below that line. There was a major sell signal which was here, and so we are finding resistance there. So as long as it's holding below that line, it should continue being under pressure. If you take a look at the VIX itself on a daily standpoint, on a daily chart for the VIX, confirmation that the top lines of the RSI is where it's finding resistance. So it hit that line. So let's draw that again. It hit that level there, and you can see that now it seems to be stalling it. So the VIX, unless it can move above the declining RSI top lines, should at least short term not be moving much higher. So this is resistance level for the VIX, which is probably a good indication of where the market wants to go short term, which is higher. Take a look at the VIX from an hourly basis, and we talked about this on Thursday, that the VIX had hit this level here, which has been prior resistance, and more than likely would see a pullback. So this 3% pullback on Friday makes sense, and you can see that previous highs have come when the VIX hits that line on the RSI. So it all makes sense that the market is trying to move higher here with Friday's close, because the VIX is finding resistance in an area where it's been finding resistance over the last couple of months. So the VIX finding resistance here suggests that the market wants to move higher hour to hour, and also in a 30-minute chart. Let's take a look at one more, which is for Apple, and we see here on the monthly, the stock closing slightly below 91.48. 91.48 was the previous highest monthly close. The stock needs to be above 91.48 if it's going to do well. Otherwise, if this turns into a breakout failure, then more than likely we see lower prices. So very simple idea here. Anything above 91.48 is a buy. Anything back below 91.48 is a sell.